our strategy isn't about chasing short-term target. Our strategy is about creating high quality, scalable, resilient businesses that can grow efficiently over time and really return value for our shareholders.
Hello, you're watching Proactive. Joining me is 4Global CEO Eloy Mazon. Eloy, very good to speak with you again. What's behind the revised revenue guidance and how should investors interpret it?
Hi, Stephen. Good morning, and thanks for inviting me here today. Sure, I think the context is key here. This year was a significant transition for the business as we shifted focus to North America, which is a market famously difficult to break into. But we've made outstanding progress, as you would have seen from the RNS in this endeavor. And we've done so by approaching these, very strategically and in a measured way, really to ensure that we have the right infrastructure, the right offering, and the right go-to-market strategy. And it's evidence that from the revenue growth that we're seeing that it is working, and hopefully we'll get to talk about this later on. But establishing a solid foothold in a new market takes time and it takes resources. And what we've been working towards this, we've also switched to a much more selective approach in the Middle East that we've talked in the past. And it's taken a lot of bandwidth for the team, for the business, and for our resources. If you allow me the analogy, we've been as a business building a runway on the airport to take off at the same time that we were flying the plane. So it takes a lot of time and effort, which as a result, some of the deals that we had hoped to conclude in this financial year has naturally taken a little bit longer to get over the line, but they're very much still in play. And more importantly, these are the typical higher margin, recurrent and repeatable revenue type contracts. So we not only have great growth prospects in this new market, but the whole profile of the business is changing and is improving. So look, yes, revising revenue expectations is never ideal, but the overall trajectory of our business is overwhelmingly positive. We're really gaining real traction in what this is a massive market, the North American market for us. The pipeline is growing really fast and there's real commercial momentum building behind the business. So despite the change in numbers, we're really excited about the direction of travel and we're more confident than ever about the long-term future of our business.
Eloy, can you tell us about the performance in the Europe by region?
Yeah, so obviously, as I've already alluded in my first answer, North America has absolutely been a standout performer. We've achieved 145% growth in the region, which is about 1.6 million at the end of February. That's significant for a business like ours in our first year entering this new market. And we've done so by really focusing on where the opportunities are. And it's very satisfying to be able to report this really significant growth. But I can't emphasize enough how big this achievement is and how grateful I am to our teams for the hard work and the dedication on getting us to this point, which there's been a lot of hard work going into it. And not only just driving the sales that we've achieved this year, but also setting us up for real growth in the region with key anchor client relationships that have been established, several very lucrative multi-year contracts which are in place, and a very growing pipeline. So all in all, really pleased with the performance of the business in this market, which is only continue to grow into the future. Moving on to other regions, so I've already alluded to, revenue in the Middle East has declined, and this was expected. We've had a climb from 2.5 million to about 400,000 these years, and we already hinted into this in our interims. But I can't emphasize enough that this was the product of a real conscious decision to move away from a lower margin business there and to really focus our efforts on our core US and European markets, which is where we really see the big growth coming from. And last but not least, revenue performance in our home market, the UK and Europe. It's been fairly consistent. At the end of February, we had 3.1 million from those markets. It remains our largest segment. And whilst there's been a lot of talk and focus around the opportunity in the US, where the real growth is coming from, we really still see this our home market having a lot of key growth potential going forward. As again, some of the multi-year contracts that we've achieved to sign this year, extending relationships. So I think the real takeaways here is that we have successfully shifted towards higher value markets, which is always in line with our strategy since we came to the market. That's what we have been saying, and that's what we've been focusing on. The multi-year contracts that we signed in the second half of the year, which are worth more than 5 million pounds altogether, are evidence of these, and it's giving us good revenue visibility into next financial year and beyond. So whilst commercial progress that we're making in North America isn't yet immediately obvious because the numbers are building up, but the growth is phenomenal. You can see the trajectory that we're having in that market, and it's really, really encouraging. We're really homing into where the real growth is for our business.
Your revenue mix has changed significantly compared to last year. What does this shift mean for the business, and why is it important?
Yes, as you know, when we came to the market, we had a much more level split between what we classed as consultancy revenue and data revenue, which is the recurring and repeatable type revenue in our business. And look, consultancy revenue is great, but by its nature is very manpower heavy, and it's very project based, and it offers far less revenue visibility, which is not what we want. Which is why, from day one in the market, our strategic priority was really to shift, and in all our communications, we've emphasized that, to that more scalable license-based model where, in the simplest terms, our customers pay for access to our data and insights on an ongoing basis. That's the model that we're migrating to. And that's where the insight solutions and the insight platform elements of our offering come into it. And as you've seen in some of our recent announcements in terms of numbers, that's really starting to come through to really driving that offering to the higher margin, greater predictability, and overall a much greater longer term value business. So we've also increased, as you will have seen on the announcement this morning, we've really shifted from a 60% annual recurring repeatable revenue type data-driven contracts to 81%, which means the majority of our revenue now is this high quality revenue going forward, which is really setting us up well for the future and making the business far more resilient. So, and this is all as a result of the delivery steps that we've been taking in the years up until now, and certainly around this transitional year that we've had in financial year 25. So for investors, what this really means is more stability, smoother cash flow, and certainly more sustainable long-term growth for our business.
Eli, moving forward, what's the bigger picture for investors?
Yeah, so look, we now set up for sustainable long-term growth, and you probably can read these from my previous answers. We've done the hard work to prepare for a scale. As I keep saying, this was a very transitional year for us. We've built the right infrastructure, we've refining our model, and we're positioning ourselves in the right markets. So we're operating now in markets with really strong long-term drivers. The demand is high, as we can see through the sales that we've achieved and the pipeline. Our offering is one, if not the best in the world, in my opinion, and we've really aligned ourselves with where the industry is heading, which is really important going forward. So I think the most challenging phase can be said that is now behind us. There's still a lot of work to be done going forward, but we've managed that transition very well. And breaking into a new market is never easy. Okay, it's never easy, especially at the same time that you're restricting how you operate in other markets like the Middle East. But we've navigated these transitions, and we now really focus on accelerating growth. So also cash flow and revenue predictability, which are really important, are improving. North America in particular, it really offers very attractive payment terms, and that gives us greater stability and visibility going forward. So from day one, we've always been very consistent about this. Our strategy isn't about chasing short-term target. Our strategy is about creating high quality, scalable, resilient businesses that can grow efficiently over time and really return value for our shareholders. So the opportunity ahead is really exciting. We're building on a really strong foundation. Momentum is building, and we're very confident on the path ahead.
Well, Eli, I hope you'll keep us posted on any progress on that path. Thank you very much for taking the time to speak with us today.
Thank you.
That's for Global CEO Eloy Mazon.